Hello everyone, welcome to JCF Weekly. I'm the founder of Joint Commonwealth Fund, or JCF. So JCF is basically a crypto index fund aiming to make basic income universal. So for this week's weekly, we'd like to discuss the topic of how much is one Bitcoin really worth. Okay, because some of you might know Bitcoin has risen up from about 1 Bitcoin to 5,000 US dollars to about 7,000 or 8,000 recently. But of course, one question is, well, Bitcoin continue to rise while you fall back. What should we do? And, is it worth an investment? All right, so before answering these questions, I think one really important thing is to first understand what Bitcoin really is. Okay, some people, Bitcoin is called what's called cryptocurrency that started in, 2009 after the financial collapse of 2008. So what happened is it was portrayed as a currency. However, a more accurate way to see and describe Bitcoin is probably that of precious metal. Okay, so something like gold. The reason is that Bitcoin and gold really share a lot of similar characteristics. For example, gold has limited supply, and that is one of the reasons why it has such a value. Because although gold does have some functionality, such as industry use, it can be used in some electronics, but its industry use is really minimum. And most of gold's use is either as jewelry, so that it can look good, or as a store of value. However, jewelry, we know there are other materials that look prettier than gold, and can even be more easy to keep in good conditions than gold. So really what gold comes down to is really just limited supply and a store of value. And that's exactly what Bitcoin is. Bitcoin is based on what's called blockchain technologies. So what blockchain is really is just a distributed ledger, a bookkeeping place of all the transaction that has been done over Bitcoin. So for example, if I send you some Bitcoin, that's a transaction from A to B. And that's recorded on the public ledger of Bitcoin, sort of a account book that will never be changed. Once it's written, it's there forever. Nobody can change that, and it's very safe to say that because since 2009, the Bitcoin ledger, the accounting book, has not been hacked or changed in any way. So it's very safe and reliable. And it's because of this distributed ledger or this distributed bookkeeping that we know exactly how much Bitcoin belongs to a given account or address. And that's what gives Bitcoin its value in terms of keeping a record of who owns what. Now, Bitcoin has limited supply at 21 million Bitcoins at most, which is almost to be mined in the next couple of years. So in that regard, it's really similar to gold. However, Bitcoin does have something that gold doesn't have. For example, if with gold, you need a big room to store if you have a lot of gold, say $1 billion US worth of gold. And it's very costly to transport and to verify. However, with Bitcoin, it's easy to store, to transfer, to verify. So with all those good properties, in many ways, it's a better form of gold. Now let's talk about how we should look at the value of a Bitcoin. So sort of say, what is its intrinsic value, as Warren Buffett usually like to assess for companies. What's a company's intrinsic value? Now there are different ways to look at value. One is of course utility, which is what can this thing be used for? Now, even if we don't look at the utility value of Bitcoin simply as a store of value, as a value-keeping storing device or vehicle, if Bitcoin is like gold, and let's say, it can replace some current usage of gold, then one way to estimate is we look at how much gold is worth today in total market supply, which is $7.5 to $7.8 trillion. So what that means is if, for example, just 10% of those 7.5 trillion is replaced by use of Bitcoin, then each Bitcoin will be worth at least 34,000 US dollars. Okay, this is a very simple calculation. You do a $7.5 trillion US dollar times 0.1 divided by 21 millions of Bitcoin. And that's the number you get, about 34,000 US dollar. And that is just a 10% replacement. You can either think it can be more or less, but make your own pick. So this is one way to estimate the intrinsic value for Bitcoin. Now, Bitcoin does have other values. For example, besides Bitcoin, there's already about 2,200 other kind of cryptocurrencies out there, like, Ethereum, Litecoin, EOS, Ripple, to name a few. Now, you may not be able to buy all those cryptocurrencies, over 2,000 of them, with US dollar or, with any other dollars in your own country. However, you can most certainly buy them with Bitcoin. What that means is Bitcoin already has a status as like the de facto currency in the crypto world, much like how, US dollar or euro has become a sort of a standard currency in the global currency market. So Bitcoin does have that kind of value and that role to play in the cryptocurrency or blockchain market. So one really good way, if you look at as a store of value similar to gold and as having a de facto status in the cryptocurrency world, Bitcoin, I would say, is at least worth $30,000 US dollar, in a foreseeable future. Now the price is about 5,000 to 8,000 US dollars. So you see there's still potential room for growth. Now the third question people might be interested to ask is, how should one invest into this? If you accept that Bitcoin does have a certain value, then the good question is, how can one invest or benefit from this? Now, Bitcoin prices, for sure, it's going to rise and go up and down and become it could be volatile because the whole space of cryptocurrencies is still very new. But one strategy that some experts have indicated that would help is you can use a 30-70 rule or 3-7 rule, or maybe in some cases a 2-8 rule. So what this means is that if Bitcoin is is getting decrease in price, then if it increase in price, one way you can just you can just buy Bitcoin when it's low, as deemed by whatever price point you like to. But what happens if prices rises up? One good rule of thumb is you sell up 70% of what you're holding, but keep the remaining 30% so that it can perhaps continue to rise. But even if it falls down, then no worries, because you've already sold a majority of your coins and maybe have already made a profit. Now, on the other hand, if the price is going down, then what do? Well, if you are afraid that it's going to continue to go down, then you can sell, again, 70% of what you're holding while keeping the remaining 30%. The reason to keep the remaining is that if there is a chance it bounces back in the future, you still have something, there to gain values for. So this is a simple 3-7 or 7-3 rule a strategy you can use. And this is something I learned from James Altucher's cryptocurrency newsletter, which he has contact and relation with some of the top traders and investors in the space, and this is a best practice that you're using. So this is something you, as an individual investor, might also consider. All right, so that's it for this week's JCF Weekly. If you like our content, please go to our Facebook page and like us or subscribe to our YouTube channel. And if you'd like to learn more about JCF, how we use index investment to make sure that you can ride on the crypto trend while also achieving social benefits and social good, please come visit us at jcf.world. Okay, we'll see you next time. Thank you.